In a bold move indicative of the shifting landscape of the automotive industry, Shell, one of the world's largest oil companies, has unveiled plans to shut down 500 gas stations over the next 12 months. The decision is part of Shell's strategic initiative to transition towards electric vehicle (EV) infrastructure, with the aim of converting 1,000 petrol stations into electric charging stations. This transformative shift underscores Shell's adaptation to evolving consumer demand and signals a significant step towards a greener future. According to Shell's latest energy transition report, the company intends to close 500 retail gas stations within the next 1 to 1.5 years, with a projected completion date by the end of 2025. While some may interpret this move as a commendable effort to mitigate environmental impact, Shell clarifies that the decision primarily stems from market dynamics and future demand projections rather than solely environmental stewardship. Shell's focus lies in scaling its public EV charging network, with ambitions to expand the total number of charging points to 200,000 by 2030, a substantial increase from the current 54,000. The company aims to achieve this target by divesting 500 Shell-owned sites annually, as outlined in its transition strategy. Notably, Shell emphasizes its intention to prioritize public charging stations over home charging, citing anticipated customer needs and the strategic advantage of its extensive global network of service stations. While Shell's concentration on expanding its EV charging infrastructure appears promising, some observers raise questions about the geographical distribution of these stations. A significant proportion of planned charging points are situated in China and Europe, with comparatively fewer earmarked for North America. However, given the anticipated surge in electric vehicle adoption in the United States, it is plausible that Shell may reconsider its distribution strategy in the near future. Beyond its commitment to EV charging infrastructure, Shell aims to leverage its competitive advantages and convenience retail offerings to enhance the customer charging experience. By providing ancillary services such as coffee and food at charging stations, Shell seeks to capitalize on revenue opportunities akin to Tesla's model of offering additional products and collecting valuable customer data. Despite its pivot towards greener initiatives, Shell remains cognizant of its core business objectives and profitability. The company expects a robust internal rate of return of 12% or higher from its investment in EV charging infrastructure, aligning with its broader energy transition strategy. Moreover, while Shell sets ambitious carbon emissions targets for the next decade, including aspirations for net zero carbon emissions by 2050, some skepticism lingers regarding the feasibility of such goals for a company deeply rooted in the oil industry. To bolster its transition towards sustainability, Shell plans to allocate substantial investments of $10 to $15 billion into low-carbon energy solutions between 2023 and 2025. These investments will support key areas such as offshore wind energy and the development of EV batteries, underscoring Shell's multifaceted approach to embracing renewable energy technologies. In a notable acquisition move, Shell acquired the United States EV charging network Volta Charge, alongside forging numerous partnerships to bolster EV development efforts. However, questions arise regarding the efficacy of such acquisitions and partnerships, particularly in light of evolving industry standards and market dynamics. As Shell expands its presence in the EV charging sector, its market share in the United States remains modest, constituting approximately 1.7% of the public DC fast charging network as of Q3 last year. In contrast, Tesla commands a dominant market share of 61.8%, underscoring the competitive landscape Shell faces in the burgeoning EV charging market. Shell's decision to close gas stations and transition towards electric charging infrastructure marks a significant milestone in the company's evolution. While commendable strides are being made towards sustainability and greener energy solutions, challenges persist in aligning business objectives with environmental commitments. As Shell navigates this transformative journey, stakeholders remain watchful of the company's ability to adapt to changing market dynamics and emerge as a leader in the era of electric mobility.